All right, y'all. Let's talk about depreciation. What is depreciation? Depreciation is something that is spelled out in your insurance policy. Even if you have a, quote, replacement cost policy, you're probably gonna, when you have a claim or have a loss, you're probably gonna have an adjuster take some degree of depreciation. So depreciation is the value of an object today versus what you bought it for. And good easy example is, let's take a guitar. Let's say you've got a Les Paul. It makes a Stratocaster, right? So you got a Stratocaster you bought in '85, and it cost you, I don't know what they cost, so I'm gonna throw a number of $500. And you have a fire, and that Stratocaster is destroyed, is gone. And part of your claim, you list your Stratocaster at, I'm guessing its value, real world market value, would be higher than $500. So you say, well, it's probably $1,000 to go out and replace that. So you list that down in your loss list. And your insurance company says, okay, well, you had a guitar that you bought in 1985. The life expectancy of a guitar is 25 years. So guess what? We're going to depreciate the heck out of that thing. But we're going to make you feel good about it. So we're going to only get depreciate at 50%. So we'll give you $250 for your Stratocaster. All right? You're pissed. I would be. But guess what? That's how your policy reads. So the only way to recover that amount is to go spend that amount. And that's how insurance companies get out of paying a lot of money on claims, is they depreciate it and they pay out what's called the ACV, the actual cash value. It's a depreciated amount. And they usually don't ever have to pay out anything else. Because guess what? You're not going to go out and buy another Stratocaster for, let's say it's $2,000 now. You're not going to come out of pocket for that, are you? Most people wouldn't. So that's depreciation in a nutshell. And I see a lot of sloppy claims handling and claims adjusting where folks will take, insurance adjusters will take a across the board 35% depreciation on a structure, on a building. And that's just lazy, all right? So what can you do as an insured or a contractor, this man that's looking at this ACV check, actual cash value payment check, and say, man, I can't do this project for this? Well, first off, don't start, don't do anything, don't incur any costs until the settlement, the claim is settled properly. Secondly, go back to the adjuster. And as a contractor, you can't do that. You're going to have to put that on your insured. And if you're an insured, that's your job. You've got to claim, you've got to stake your own claim here, folks. All right? Go back to the adjuster and say, what is this 35% based on? All right, this just looks like a plug number to me. Why did you take 35% of the value of my property and just take it away? And if they can't come with a good reason, like I just laid out an all right reason, right, for the Stratocaster, if they can't come with a good reason why they took the depreciation, they owe it back. They owe it to you. No, it should have been 10% depreciation. Good. Give me my 25% back. All right, right now, because as it stands, I can't afford to do these repairs with the ACV check that you presented me. So, if you want to avoid depreciation, get a true replacement cost policy. They exist. And if your agent is one of the big three national carriers, they probably don't have one that they want to sell you. So go find an independent agent that will sell you a true replacement cost policy, yes, it's going to be a little bit more expensive, a little bit more premium maybe, but man, you don't pay insurance for when you don't need it. You pay for it when you do need it, and when you do need it, you don't want to play any games. And with the replacement cost policy, you want to play these depreciation games. So, clear? Any questions? Give me a holler.